Hi everyone, this is Richard, CEO and founder of altFINS. In this short video, I will demonstrate how to find a bearish RSI divergence, and we'll illustrate this using Litecoin, which is a recent example of a bearish RSI divergence, which played out exactly how it should in the textbook, basically led to a sharp pullback in the price, and we'll also do a technical analysis of Litecoin as to what's next possibly and whether that's an opportunity. So let's go ahead and go to the crypto screener and find Litecoin. LTC. Here we go. Now let's take a look at the chart. As you can see, the price really topped out around 80-85, and then there was a sharp pullback. But the RSI divergence that I'm talking about, we actually have it in a curated chart illustrated. This is a great tool for traders to find trading ideas, is to look at our technical analyses that we do for about top 50 coins. But here we identified a couple of weeks ago that although the price right on the upswing here and then the next upswing made a higher high, which was positive, but it was with less momentum and less strength, specifically relative strength index also swung up, as you can see here, but not higher than the prior swings, right? So this top here, or this second top, is lower than the prior top, and that basically indicates that the RSI was less robust, that the increase in price was not accompanied by the relative strength increase as well. The RSI made a lower high while the price made a higher high, and that's a bearish RSI divergence. As you can see here in the description, price made a higher high but RSI made a lower high, and that's bearish, and usually that's followed by some weakness. It shows that the buyers, the strength from buyers is not as robust, and that we could see some weakness as the sellers take profits, and indeed that's exactly what happened here. As you can see, after about a week or 10 days, the price has made a sharp pullback, and that RSI divergence was a warning to us, right? So that I would basically, when I see a bearish RSI divergence, there could be also a bullish one, which would be the opposite. But in this case, a bearish RSI divergence basically gave me a warning in which I'd say, okay, if the price does not hold this resistance zone of $75, we're in trouble here. We got to get out. And now that it's pulled back, what to do next? Well, technically, the price is still in an uptrend, as we indicate here in the description, at least on the medium and the long-term basis. And what we believe is that this pullback is potentially a buying opportunity, particularly as it gets close to the $60 support zone, which also lines up with a 200-day moving average. This red line is a 200-day moving average, which oftentimes serves as a pretty robust support area if the price is approaching it from above, as it is now. And when it lines up with another horizontal support area, in this case $60, when those two things line up, the 200-day moving average and the horizontal support area, it creates a pretty solid support zone where one could expect the pullback in price to stabilize and maybe even see an upswing thereafter. So it could be an interesting, attractive entry area in what is overall an uptrend, right? That's the first rule, is you trade with the trend. In this case, it's an uptrend. And then the second is to buy it near the support zone. So for us, this pullback is an attractive entry opportunity. Of course, this is just my own opinion, not financial advice. You have to do your own research and decisions. But I do think that these technical analyses that we prepare, you can also see them under the technical analysis section, is a great starting point for beginner and intermediate traders to find some trading ideas and also learn the basics of technical analysis. All right, I hope this helps. If you have any questions, please email us at invest@altfins.com, and good luck trading.